Thank you. Thank you. It is fantastic to be back home in Alberta. Above all, I want to thank those behind me, the work.
A recent speech just laid out some bold moves on energy, trade, and innovation. And if you're investing in the stock market, or just want to understand where the money is headed, this is a roadmap to the future. We're breaking it down quote by quote, showing you what each promise means economically, and where the opportunities and risks really are. It's clear, simple, and made for beginners. Stick around because we're talking about critical minerals, energy infrastructure, faster project approvals, and clean technology. Stuff that could literally reshape the global economy. Like, subscribe, and let's get to it.
The workers, the students graduating from TradeWinds, a program that empowers Indigenous peoples to find their path to a good career in the trade. And this record, Jay, of 100% employment coming out. Great training, great jobs that come through, building our future.
This is a workforce investment play. A 100% employment rate from a training program suggests there's high demand for skilled trades. For beginner investors, this means government-backed education can lead to economic growth, especially in infrastructure and construction. Plus, empowering Indigenous communities helps expand the labor force, both positives for long-term sustainability. It's also a hint at where future job growth may be concentrated in skilled, hands-on fields.
And the Ironworkers Local 725, ironworkers across this country who are literally building Canada. You are exactly the people we need right now and for decades to come. We need builders. We need unionized builders. We need extraordinarily skilled women and men like you, because being extraordinary is how we are going to emerge stronger from the biggest crisis in our lifetimes.
This shows support for skilled unionized labor, especially in trades. From an investment angle, this tells us to watch sectors tied to construction and infrastructure. With long-term backing, companies aligned with labor union might win more government contracts, but also union strength often means higher wages, which can raise costs for projects. That's a mixed bag. It's good for workers and economic spending, but it also creates potentially higher costs for developers and governments.
We're facing now a different crisis. President Trump is trying to fundamentally restructure the international trading system. And in the process, he's rupturing the global economy. We've seen the impact of this chaos. Volatility in global financial markets, retirement savings being put at risk. And here in Canada, President Trump's tariffs are threatening Canadian labor and Canadian business. They're putting people's livelihoods in jeopardy. From auto workers in Ontario to iron workers here in Alberta. We are responding with purpose and with force because we are masters in our own home.
This is about trade tension, and it directly impacts global markets. When tariffs go up, trades go down, and supply chains get disrupted. That's bad for some businesses, but creates new openings for others. For investors, this signals more government action to protect domestic industries. Sectors like manufacturing, steel, and auto could get support, but there's also the risk of economic retaliation or higher input costs. Volatility in markets is the key concern here.
We'll fight, we'll protect, but above all, we will build a new Canadian economy. We will build Canada strong. Now, since becoming your Prime Minister, I've chosen to continue to speak plainly. And the truth is, we haven't been thinking as a country, we haven't been thinking or acting big enough. As a nation, we've played it too safe by relying too much on the United States. It's time now to realize Canada's full potential.
This quote is a pivot point. It's about ambition. From an economic standpoint, the takeaway is diversification. Moving away from over-reliance in the United States could mean more Canadian-made goods, more self-sufficiency, and new trade relationships. That's long-term bullish for Canada, especially in emerging sectors. It's a signal to look beyond traditional trade corridors and pay attention to companies expanding into new markets.
Because if we want to achieve our full potential as a country, we have to recognize and leverage our strengths. We have to recognize that we have the best workers in the world, the iron workers, the builders, the 700,000 energy workers here in Alberta across the country. Recognize as well that we are home to an abundance of conventional, that means oil and gas, conventional and clean energy resources. Recognize that Canada has everything we need to realize an amazing potential.
This paragraph highlights Canada's natural and human resources. It's about leveraging what already exists. For investors, this implies continued support for both conventional energy, like oil and gas, and renewable energy. The mention of 700,000 energy workers also confirms the sector's scale. This is an important reminder the energy sector is not going away anytime soon, and there's opportunity in both old and new energy investments.
Today, I'm announcing a comprehensive new approach to make Canada the world's leading energy superpower. And it's approach that is defined by three objectives. Energy security first. This means using Canadian energy to displace imported energy, including energy imported from the United States.
Energy security is a national economic priority here. Using Canadian energy over imports boosts domestic production and keeps jobs local. It also insulates the economy from foreign supply shocks, but it could lead to less trade with traditional partners if not managed well. Investors should expect to see more support for Canadian energy producers, particularly those focused on domestic consumption.
Secondly, trade diversification to widen our partners and again to reduce our reliance on the US.
Diversifying trade reduces risk. If Canada expands its economic ties with Europe, Asia, and/or Latin America, it creates new opportunities for exporters. This is especially relevant for agriculture, energy, and the tech sector. For investors, this could mean better access to Canadian companies and possibly a rise in international partnerships or acquisitions.
And thirdly, long-term competitiveness. To build the strongest economy in the G7, we need to develop both clean energy and the lowest carbon conventional energy.
This is the future-facing part of the energy strategy. Long-term competitiveness means staying ahead of both oil and clean tech. It's not about picking one side, it's about doing well in both. This dual approach opens opportunities for companies innovating in carbon capture, clean fuel, and hybrid models. For investors, this suggests stability in traditional sectors, but with more incentives to go green.
Our approach starts at the beginning of the clean energy supply chain by catalyzing investment in critical metals and minerals. Nickel, lithium, copper, cobalt, manganese, many more. We in Canada have the vital components of the clean energy revolution, and this in a world that's currently dominated by China. Today, I'm announcing a new Liberal government will create the first and last mile fund that will connect critical mineral extraction projects to our supply chains to get them to market. In other words, from rock to road and rail. Getting these projects built faster while creating good, higher paying jobs in the trades. Catalyzing the exploration, development, and use of these minerals. To do that, we will introduce and reinforce a series of tax measures.
This is huge for mining and clean tech. Critical minerals are the backbone of electric vehicles, batteries, and renewable infrastructure. Right now, China dominates this market, so Canada stepping in is a big shift. The mentioned fund helps move these minerals from mine to market faster. That means mining stocks, infrastructure firms, and clean energy suppliers could all benefit. And tax incentives? That's fuel for more private investment.
Together, all of these measures will help ensure that Canada becomes the global supplier of choice for critical metals and minerals. But we will choose our trade partners carefully for those who share our values and who treat us fairly.
This is about value-based trade, not just volume. It's a strategic shift toward reliable, friendly partners. Economically, this limits exposure to volatile or hostile markets, but could reduce the pool of buyers. For investors, it adds predictability to export, but might slow down rapid growth. Still, long-term stability is often more attractive than short-term gains.
Critical minerals are just the beginning. We need to get more clean energy built. And our system of investment tax credits are promoting a generational investment in clean energy. They're an investment in making oil and gas as well, making oil and gas the lowest emission and therefore the most competitive in the world. They will unlock more solar, more wind, more nuclear, both large scale and small modular, more geothermal, more hydrogen, more biofuels, more projects that will create good careers for tens of thousands of Canadians across this country.
This is a clean energy boom in the making. Investment tax credits reduce the risk for developers and increase return potential. It's not just about solar and wind. It's everything from hydrogen to small nuclear. For beginner investors, this means looking at ETFs or stocks tied to these energy types could offer long-term upside. This also means more innovation, more jobs, and possibly new Canadian energy giants emerging in the markets.
As the world shifts to using lower carbon energy, increasingly only the cleanest oil and gas will be consumed. Our oil and gas industry recognizes this. They're committed to net zero emissions by 2050, and so are we. Now, the time for analysis of how to get there is ending. My government is focused on results, and the results of the current consultation on the emissions cap will reflect the importance of efficiently and fairly achieving these objectives. My government will work closely with our oil and gas industry to reduce their emissions over time so that Canadian conventional energy will supply the world for decades to come.
This is a pivot from goals to execution. The message is clear. The oil and gas sector isn't going away. It's just going cleaner. For investors, this means oil and gas companies will remain central, but only if they embrace sustainability. The shift to clean oil is a key narrative to watch. Companies that invest early in emissions technology could become global leaders.
I'm a pragmatist, so when I see something needs changing, I change it. And that starts with our mindset. At the moment, when we're thinking about new projects, too often the immediate question is why. Instead, we need to ask ourselves, how? How do we get it done? How can we build things in our country? I believe in Canada. I know we can do big things, and I know it's time to build. And that's why my Liberal government will establish a major federal project office with a clear mandate. Issue a decision after a single review on a project within 2 years instead of 5.
This is all about efficiency in approvals. Fast tracking big projects from 5 years to 2 years could change the game. That means faster returns on investment, quicker job creation, and more certainty for infrastructure and energy companies. For investors, red tape is also good news. It shows a government that wants to build and fast. So what does it all mean? Canada is betting big on energy security, trade diversification, and clean tech leadership. And if you're paying attention, there are signals for where investor capital could flow next. If you got value from this breakdown, hit that like button and drop a comment. What sector are you watching most closely right now? We're building a community of investors who care about understanding policy before the market reacts. Join the conversation, ask questions, and let's decode the future together. In the next video, we'll break down another essential economic speech and how it could supercharge global sectors. You don't want to miss it. Subscribe so you're the first to know. Thanks for watching, and I'll see you in my next video.
Happens. Thank you.